If we focus on sort of I think you're calling them the regulated market, so far seems to be three main approaches to reduce greenhouse gas emissions, seems like. And tell me if I'm right or wrong. Tell us a little bit about each one, if you can,
Sure.
and how effective you think they are, from specifying limits to taxing to then this marketplace or capitalist marketplace approach.
Right. In short, there were regulation, taxation, or cap and trade. And if we start with the regulation aspects, I mean, that's something that's been going on forever. Governments are regulating all kinds of things. One example that we're all very familiar with is regulating the emission levels from internal combustion engine cars, right? And those levels have been tightened via regulation for many, many years now. And so basically regulation sets rules, binding targets to maybe an industry or a company or some emission source that they must comply with, irrespective of how much it costs to do that, how efficient or inefficient it is to comply with that new rule. So that regulation works. It works well. It is binding, right? Via regulation, you're essentially, let's say, guaranteed to meet your targets, your goals, your climate ambition. But the challenge is, policymakers might not be the best suited ones to pick those areas that are, efficient to decarbonize. So how costly is it to society to decarbonize via just using regulation? And the fear is that it's quite costly, and it would cost a lot of GDP growth and wealth and jobs if regulation was the primary toolkit.
Mm-hmm. Okay.
So that's that aspect. Then another aspect would be putting that price on carbon, putting a price on emissions, pricing something that previously was free, and you can achieve that via a fairly simple to execute carbon tax. You basically say, look, like for every ton of emissions that is generated, the emitter now needs to pay, let's call a number, $50 per ton, right? And then you change behavior. That incentive is going to have a real world impact. Market participants that previously have been freely emitting without thought are now going to think about, well, do I really need to do that task? Are there alternatives that I have that allow me to emit less? And so you're going to have a positive impact. The challenge with a tax is setting the right level, because if you set the tax too low, you risk not achieving your climate targets. And if you set the tax too high, yes, you are achieving those targets, but chances are that also is costing you growth and jobs. So regulation, guarantees the outcome, but is highly likely an inefficient way of going about this. A carbon tax, more efficient, but doesn't guarantee the outcome. Setting the price is next to impossible to set the correct price. And that's really where the third method comes in, the third tool, which is these emission trading schemes or cap and trade systems. The way that they work is that basically the government, the regulators, define what industries are part of it. And then those industries are told and forced that for every ton of CO2 that they emit, they must have a permit to do so. So basically, one permit allows you to emit 1 ton of CO2. And the regulator issues those permits every year. And the regulator sets a cap or a quantity of permits that are being issued. And so per definition, because this is binding, that cap of permits issued is defined the total emissions that are possible in the system. Because if you don't have a permit, if you cannot get your hands on a permit, you may not emit. So it's a cap that is binding and hard, and therefore basically guarantees that you're reaching your climate ambitions. And now over time, how that system works is every year you're reducing the cap, you're reducing the number of permits that you issue, and thereby emissions must decline over time in line with that cap.